Okay, so the key trends in the market, as I see them at any rate, are continuing volatility and increasing fragmentation of the investor base on the debt side of the debt-equity equation. I think that what we'll see is repricing of debt, so that as secondary prices continue to be depressed and the high yield market continues to be closed because of the volatility in the macro environment, that there will be a repricing of even club loans to a more expensive level than we've historically seen. I expect that deal volumes will be low. I expect that deal sizes will be moderate. I think that for the bigger deals, I think PE will struggle to get financing together to compete with the trade bid, and I don't see that changing over the next 12 to 18 months. I think in terms of what I've learned today and what I've seen from sentiment that I've come across in the room today, I don't see any reason to change that view. I think we've got a very broad church of investors and banks represented, and the message is the same. It's going to be volatile, it's going to be fragile, and the confidence and ability of banks to deploy balance sheet in that environment will be limited. So we'll be finding new providers of capital that allow deals to happen, even at moderate levels. I think whether the outlook's bright or not depends on who you are. I think if you're an investor buying into new deals at a higher yield, I think the outlook is reasonably good. I think you can pick and choose and price your debt as you see fit. I think if you're an investor who's looking to take over a position of an existing lender to a well-performing but over-indebted business, I think equally the outlook is good. I think if you're a bank with a large leverage finance book of positions that were put out in 07, 06 and 05, then obviously it looks very different. But I think for the banks in general, absent the leverage loan space, this is a time of structural change, and I think therefore whether it's good or bad remains to be seen. Well, I think you've got such a broad range of people, both investors, banks and advisors, that it's a great place to actually exchange views, sanity check your own view of the market, and take a temperature test of appetite for deals in the next 6 to 12 months. I think that in terms of the numbers of people here, it's a unique opportunity, really.